Hello, Charlie here again, just to deliver a message. And today I want to talk about some things that I think might help us to understand what's going on in the economy and the markets a little better, maybe some historical perspective. And really, I just want to provide a perspective that I think may provide some comfort, may provide some peace of mind, even though we're in the middle of a pretty turbulent market. Recession is always possible. I think right now we could be in a recession. We probably have a 50-50 chance of entering one if we're not already. A lot of things are going on in the world right now. Inflation's higher than it has been in 40 years. We have a war in Russia and Ukraine, and our political environment is different. Our society is different than it's ever been. While all of these things are very different, we still know, and we study a lot, and we look at a lot of information. We still know that the principles of investing, the principles of basic fundamental economics really haven't changed. In fact, on one side of the coin, we always say the most dangerous words in investing are it's different this time. But on the other hand, what you see every day in the news, in the media, what you're reading, what you're seeing at the grocery stores, it is different this time. But we got to be careful, and we want to make sure that we can separate those two. Because again, the principles of investing still apply, even though these circumstances that we're all facing are very different. Let me show you a couple of things real quick. I'm going to share my screen and just try to provide some perspective that I think always helps us as far as previous markets and previous situations. We've experienced a lot of these difficult times before. We've been there before, what I was trying to say. And this chart shows the vertical green lines, I would call them, represent different recessions throughout our history, back to the Great Depression in the 1920s. It starts in 1926, shows the Great Depression subsequently after that. So we have all kinds of things. One of the things I think about is the decade of the 60s. Look at all the things that happened in the 60s, such as the Cuban Missile Crisis. We had an assassination of President Kennedy. Martin Luther King was assassinated. And so pretty tumultuous decade there, and it's pretty difficult time in our history. But yet we had positive stock market returns. We had a recession on the beginning of 1960 and then towards the end of 1960. The 70s were pretty difficult as well, as you probably may remember, but there was an oil crisis. We had high inflation, 14.4%, and a down market as well, and of course a recession. The downturn was 21 months, so it gives you a little bit of perspective of a different time in history. And then in the early 80s, same kind of thing, high inflation, 6.3%. Max unemployment was about 7.5%, and it was a 2-month. That was 1980. We followed up in 1981 with another recession that lasted 14 months. Again, still high inflation and a bad stock market there as well. And of course, you all remember the Great Recession or the global financial crisis. Very, very difficult time. The stock market downturn lasted about 16 months, was down about 50% from the peak, and that's kind of measured on the S&P 500. Well, I just want to share with you the good news is that, and there's reason to hope we'll get through this. We have experienced things like this before. There is a light at the end of the tunnel. We don't know how long this is going to last. But I wanted to share with you too that in the past century, there have been 15 recessions in the US. 11 of those instances, stock returns were positive 2 years after the recession began. So here's what it looks like. Hypothetical $10,000 investment. And I believe this is just in a diversified stock portfolio. $10,000 at the beginning of the recession. You see the bluish, greenish lines are the 11 instances where they were positive just 24 months after the recession started. And a few of those took a little longer to recover. So there is hope. We've been through this before. And it's not unusual for the stock market to have a bad year or two. It's not unusual for us to be in a recession. In fact, it's a natural part of the economy, although painful. In fact, one person said, bear markets and recessions are a feature, not a bug of the system. But I also wanted to show you that another reason to hope is, again, the gray bar down here shows that after 1 year, those are the returns after 1 year. The returns after 3 years are in yellow, and the returns after 5 years are in this blue color. And this is a 60 stock, 40 bond portfolio. So you can see the 5-year returns after each one of these crises. It's pretty significant the returns after 5 years. And most of you probably look down at September 98 and you go, in August 89, what are those? Those are just bumps in the road, but they are significant at the time. And there's a likelihood that 10 years from now, we might not even think that this is very serious. I hate to even say that because you don't know. We don't have any idea what's going to happen in the next few months, but that is a possibility. So the last thing I wanted to show you is that we do a lot of homework. We do a lot of research. We're very, very careful about the information that we take in. We know the news media, even some things that are on YouTube, have a bias. Some of the information is very biased, either politically, either they have an agenda to sell something, a book, or commercials or advertisements on their websites, TV. And the thing that sells the most is fear. So we're very, very cautious about the information that we take in. We look for very objective sources, unbiased sources, and if there are any biases, we understand what those are. So we use a lot of research from dimensional fund advisors. It comes from the world of academia. You all have heard a lot of this before, so we're very careful about where our information comes from. We see the news, we read what you're reading, we know that it's scary, but we also know that there's a lot of other information out there that is very reliable and helps us to understand what's really going on. What are we doing? How do we invest to protect your money? You all have heard this before because you're our clients. We're not chasing hot stocks. We're not chasing the most recent trend. We're looking at the fundamentals of investing that have prevailed over long, long periods of time, and we're sticking to those principles. And so that's what we're doing right now. So we hope that helps. We want you to understand what we're thinking about. We want to try to provide some data points that might provide comfort to you and let you know that as far as the economy and the financial markets are concerned, we have been here before. We'll get through this. There's a light at the end of the tunnel. And please reach out with any questions or concerns that you have. We love to hear from you and talk to you. We appreciate you as our clients, and we hope to hear from you again soon. Thank you very much.